Hi grade 10 student. So in today's video we are going to do one of the financial statement. You can call it a balance sheet or you call it statement of financial position, is the same thing. All right, so we are going to start with the notes, and after that we are going to straight to the balance sheet. Okay, so please make sure that you watch until the end so that you're gonna gain some knowledge that you didn't know, that the balance sheet is not that difficult the way people talk about it. Okay, now let's look at the question paper that we have. Let's wrap up our notes and we fill the balance sheet. Okay, they say use the trial balance and additional information to prepare the following notes to the balance sheet as 30 September 2019. Inventory, trade and other receivable, owner's equity, trade and other payable, and after that we're going to the balance sheet or statement of financial position. So everything, it was containing 40 marks. Okay, extract from post adjustment trial balance of Tabo Shoe on 30 September 2019. Okay, they give us a trial balance which contain a balance sheet account section. Okay, now let's start with our notes. Okay, they give us capital drawings, trading stock, fixed assets, debtors control, which means that we have the balances before we even read the adjustment. If you look at our balance sheet, we have a trading stock amount, okay, which is 105, which is going to fall under the inventory. A trading stock is the same as inventory. Guys, firstly, you must know what fall under inventory. Okay, if we have stationery on hand, consumable store on hand, a trading stock on hand, we have to put it under what? Under inventory. All those items that I mentioned, they fall under inventory notes. Okay, we have a trading stock. A trading stock. Okay, a trading stock. At the beginning, it was we have 105,000. Before we proceed, we must first check if there is no any adjustment that is going to affect this one. For example, this is the inventory that we recorded at the beginning. It can happen that the owner donated some inventory which we have to subtract. It can happen that the owner withdraws some inventory which we need to subtract. So now let's check. Additional information number B. They said on 30 September 2019, after fiscal stock taking was performed, Tabo took a shoe with a cost price of 2,000 for his personal use, and this inventory was not recorded. We no longer have this inventory because he took it for personal use, minus 2,000. Okay, which is going to give us an amount of 103,000, just like that. Okay, now let's check. If you check, we have a consumable store on hand of stationery of 900. Okay, you can just say stationery on hand of 900. Okay, so in this case, we no longer have any other transaction that is going to affect this note. We can calculate a total, which means that the total is going to give us 103,900, just like that. Okay, now let's proceed to the next one. The next note is trade and other receivable. The first item that you need to check under your trial balance is debtors control. Debtors control that we have, let's check debtors control. There it is on the debit side, is 80,000. Okay, we have to start here, 80,500. Then you check if there is any additional information that is going to affect this one. Okay, let's check additional information number F. An amount of 500 was incorrectly credited against the debtors control account. This amount was received from C, else a debtor who his account was already written off as a bad debt. So this account was credited instead of doing what? Of debited. Okay, what do we do in this case? obviously we have to do what? We have to reverse it. And something that has been subtracted, when we reverse, we add it back. Okay, which means that we are going to add back 500. Okay, and it's gonna give us 81,000, just like that. Okay, make sure guys, make sure that before you start practicing balance sheet and the notes, know the format, know what falls under trade and other receivable, know the format of owner's equity, which does not change. It's always like this. Know this skeleton, because if you don't know the skeleton, even if you know the principle that I'm teaching now, you are going to suffer to know that under trade and other receivable we have debtors control. You will put creditors control, which is very, very wrong. Okay, now let's go to the next one. The next one, we are going to prepaid expense, accrued expense, that fall under trade and other receivable. We need to check them. Okay, now let's check them. Transaction number, on the trial balance, we have accrued income of interest of 8,700. Okay, so under additional information, we don't have any other transaction related to it, which means that we're gonna record 8,700 from our trial balance as it is. But if there is any, you open a bracket and you do those calculations. Okay, and the other one, prepaid expense, let's take prepaid expense under our trial balance. Prepaid, okay, after accrued income we have accrued expense. Prepaid expense, we don't have it. Now let's take on our additional information. They said number E, too much insurance was paid of 950. This amount must be used to settle insurance due to the following year. Okay, which means that in this case, because amount of insurance was overpaid and is for next year, we regard it as a what? Prepaid expense. Prepaid expense, prepaid expense, guys, is amount that has been paid in advance. So in this case, because this expense, okay, let me explain it properly. Prepaid expense, so that you will know what you do under balance sheet and income statement. Prepaid expense. Okay, guys, prepaid expense. This expense has been paid for next year. Under income statement, you subtracted this amount, but under a balance sheet, you add it. When you subtract it under income statement, it's because you want to add it under what? A balance sheet. Okay, it has been paid in advance and we own this amount because these people haven't yet performed anything for us. Okay, which means that now what to do? We have to add it, and the amount is 950. It's 950 prepaid expense. Okay, so under this note, we no longer have any other thing on this question paper. Okay, it's gonna be 9650. Okay, now let's move to the next one. The next one, they said we have to prepare owner's equity. A very simple note, guys. The first step, we have to record a balance, opening balance. If you check under our trial balance, we have a capital, which is opening balance of 1,036,470 is opening balance. Then the next one, they said the net profit for the year. Okay, if you check information on top, they give us a net profit. Okay, they say that a net profit is amounted to 774,300. Okay, additional capital, the next one. Let's look at transaction number A. Thabo Sepere transfer a vehicle to the value of 100,000 to the business on 1 January 2019 and is not yet recorded. Okay, additional capital of 100 was contributed. It's a plus. If we find drawings, we have to subtract, because drawings does not add value into the business. It subtract what? It subtract the net worth of the company, of the owner. Okay, now let's check if we have drawings. Let's first check on top. We have drawings of 33,870. Let's open a bracket, 33,870. And remember, the owner withdraw what? A stock under transaction number 2 of 2,000 for personal use. We plus 2,000. And then we're gonna get 35,870. Just like that. Okay, after that, you add everything and you subtract this one. You will get amount of 1,874,900. Just like that. That's how you prepare this note. This format, guys, is always the same. Opening balance, copy and paste. Profit for the year, copy and paste. Additional capital, you read the first transaction or the second transaction, you're gonna get it. Drawings, if they say the owner took something, it's drawings. The other one, you will find it under trial balance, and you add them together and you get the balance. Just like that. 7 marks for free. Now we are going to the last note. Trade and other payable. The first one, we check creditors control under our trial balance, which is 55,000. It's copy and paste, guys. Copy and paste. Now let's check if we have income received in advance. Okay. Under trial balance, we have accrued income. This one. And accrued income, they said, is how much? 8,700. 8,700. We are writing it here because we don't have any other adjustment related to it. Okay. It's accrued income. Let me copy the correct balance. Accrued expense, accrued income. Okay, guys, this one is not accrued income, it's accrued expense. Accrued expense, and the amount is 5,500. We just copy and paste it because we don't have any other transaction related to it. Okay, and then the next one we have, let's check SARS pay as you earn. SARS pay as you earn is given 4,600. 4,600. Now accrued income received in advance, we can't see it on the trial adjustment. Let's look at it under additional information. Additional information number D. Rent income account reflect a total of 102,000, and it is include the rent for the 3 months. Rent in advance. We receive rent in advance. This rent of 102,000, they pay extra 3 months. Remember, normal month is 12. They pay another extra 3 months, and they give us how many? 15 months. Normal months of accounting is 12 because we record yearly, and they say they paid advance of 3. We want to check how much per month was this. Okay, if you divide and you multiply by 3 so that we can get those 3 months, you will get, if you divide this one by this one, you're gonna get 6,000 something, and you multiply by 3, and then you will get amount of 20,400. 20,400. Then after that, you calculate the balance, and you're gonna get 85,500. Just like that. Okay. Now, let's proceed. Because we are done with our notes, now we can go to a balance sheet. A very simple 1. Because guys, once you're done with a note, balance sheet is straightforward. Let me show you. Okay, let's look at the balance sheet. We have prepared inventory already, which means that inventory, we have amount which is 103,900. We have prepared trade and other receivable, which is 90,650. This one they were already given under answer book. Okay, cash and cash equivalent, we must work this one. Capital is this one. Okay, it's owner's equity, which is 1,874,900. Okay, and the next one, trade and other payables, is this one, which is 85,500. You see, almost we have done almost everything. Okay, now we are going to work out the rest that are not given there. Okay, now we can close this part. Now let's come this side. Now let's check. Where do we start? Cash and cash equivalent. Okay, we know this note. There's a note of cash equivalent where we include bank, we include petty cash, cash float, we include all those things. Okay, but now guys, remember they must be positive. They must be on the debit side. If they're on the credit side, it's overdraft. Let's check. Bank, we have amount of 710, but on the credit, it's not going to fall here. It's bank overdraft. It's negative because assets increase on the debit side. Bank overdraft of 710,000. Okay, now what we can add is the rest, which is cash float and the petty cash, because they are positive. 8,500 plus 5,000, which is going to give us 13,500. Okay, and the other one, we have a loan and current portion of a loan. Okay, let's take a loan amount. A loan amount, it was 120,000, and they give us information number C. An installment of 200,000 is repaid annually on the loan at ASA on 31 December. So this loan is going to be paid within 12 months, which means that it's no longer belong here. Minus 20,000 is going to be current portion of loan of 20,000. Let me explain this again. When we say the non-current liability, we are talking about a long-term liability which is going to last more than 12 months. Current liability, these are the short liability. Short-term liability that are going to last less than 12 months. We are going to pay them within 12 months. So this 120 they said is going to be paid on 31 December, which means that it's no longer long-term. We have to remove it from long-term to a short-term. We call it current portion of a loan is going to be paid within 12 months, just like that. Okay, now let's check which one we left with. Capital we did, loan we did everything. Then current liability amount is going to give us amount of 100,000. Okay, a total asset is going to give us 2,790,400, and the other one, current liability, this one. Okay, this one is from here, 100,000. This side is 815,500, and equity is going to be the same amount of 187,900. Okay, then total assets is equal to total equity and liability, which is going to give us 2,790,400. That's how we conduct a balance sheet, guys. For those who want to attend extra class are still available. Make sure that you attend, guys. We want to build you to know accounting in and out from grade 10, so that when you go to grade 11 and grade 12, you're gonna kill it and you're gonna get a distinction. So make sure that you join us, talk to your parents so that they can pay for you for your extra class. You attend with other students and you learn so that you can get a good marks. I hope you enjoy, and the study guide for grade 10 is now available. Soft copy is 100 Rand. Currently, we don't have a hard copy which we can deliver, because to print out those textbook is costing almost 400, because it's very long book. So including delivery is gonna cost us more. So let's be patient. For now, let's buy just a PDF so that you guys, you can study, you can get a question like this that we were doing, so that you can prepare yourself. I hope you enjoy, and you didn't forget to subscribe to this channel so that you're gonna get more videos, and I'm gonna see you on the next one. Goodbye, guys.